going to be local.
There we go. I've got it too. Okay, good. So we're recording.
Perfect. Cool. Yeah. Hey, Lance. Nice to see you.
Yeah. Good to see you, Stylianos. Yeah. It's been quite eventful the past.
Yeah. Yes. So, yeah, I think.
So what are we looking at here? As a time of recording, we've got Terra USD at, it's looking like 42, 43 cents. So 60% off the peg.
Yeah. So for everyone who's listening right now, essentially the topic of today's discussion is going to be US Terra and Luna. We thought with Lance that it would be good to catch up on this because there's plenty to discuss and plenty to unravel. Right now, at the time of talking, it's been a complete bloodbath. The peg is, Terra has lost its peg. Is at $0.5. Last night I slept at 0.8, woke up today at 0.4. I didn't expect this. Many people didn't expect this. There are many pessimists who were like, "Oh, I told you so." Like algorithmic stablecoins can't work. I don't like this position because I believe they can work. But I think what this proves, at least in my opinion, is that it really comes down to the specifics. I think the Treasury hasn't handled this well, but I'm still in the process of unraveling what's really going on. I don't know, Lance, if you what do you think about
And from what I can see, because there's been a lot of posts about it, is that there was some big selling pressure in Anchor Protocol and I believe Binance, and that started it off its peg, and then there was some movement of a large amount of Bitcoin from the Luna Foundation Guard, which is supposedly, now that they've enacted their own sort of centralized collateral backing for Terra, right? So then that, I think, further scared the market, I think, as it was something like 42,500 Bitcoin. So those are the main points that I've seen, Stylianos, that sort of kicked all this off. And then if it stays away from the peg, people start to get more and more concerned. Because this is the first, I think when you did the economic audit, the analysis was how well it recovered from its sort of 91 cent off peg, and then it made its way back. But this is obviously a much deeper pricing issue, right? With what we're seeing. So yeah, it's interesting. So only time will tell. I mean, I don't know how you feel about Stylianos, but I think eventually it'll come back. I mean, they're so well known. As long as they just get in there and manage it and either buy up the UST with their backing. I don't really know what their strategy is with quote unquote backing. I think in general, Stylianos, to me, it signaled to the market when they started saying that we wanted to back Terra Luna with 10 billion in Bitcoin, was that they realized after the fact it should be, fully algorithmic stablecoins, probably not the best way to go. We need some backing. That's the only thing I could, obviously if they're doing something like that, then they have some cause for concern that they would need to back it. Then it gets into, well, then that's probably not the most elegant solution for a collateralized after the fact algorithmic stablecoin, trying to do both of them. Where I think what we've analyzed with what you and I have analyzed with BankX is very different. It's designed more around fracks with the addition of the Terra Luna burn one token to mint the other, which has been proven to be a very good, sort of one of the techniques to help to maintain the peg, because it helps to decrease and increase supply depending on what you need to do. So I think there is, some members in our community might be like, oh, well, you need to worry about this for BankX, but I mean, we're more like Frax and Hex than we are Terra Luna. We just have
Frax has kept its peg, right? So I don't know whether, I mean, there are many things going on at play here. Obviously, one thing that's very interesting is that the fact that UST handled the previous crash very well. In my opinion, this was demonstration of its effectiveness, but it looks like every situation can be different, right? which obviously overcomplicates things. Nevertheless, Frax has kept its peg very well. I don't know whether this is because it's just a superior protocol, or whether it also has less exposure in the market, whether it's just not as popular. There were some voices that were like, oh, this was a coordinated attack against the UST. I don't know. It might well be. Nevertheless, it still raises the question of, okay, what mechanisms should an algorithmic stablecoin implement in order to defend against such attacks? And now I think that the Anchor protocol, there was some proposal to, because this is where most of the lending for UST takes place. They just want to change the interest rate and a few other things to try and save the project. I think because UST in some ways it has become too big to fail for the DeFi space. We might see some people, some projects stepping in, so which is good. But nevertheless, what's unfolding in front of us, it's quite worrying in many regards. The prime one, let's say, as a tokenomics analyst for me, is that it seems that maybe the minutiae and the specifics of the models maybe matter a lot. So it's not just about the structure of the token economy, the incentives, but it looks like some things like the rewards were out of place and maybe not sustainable in some way.
Yeah, and maybe they saw this coming, and that's why they wanted to back it. It's really hard. It's just there's just a lot of things going on with all of this, where they're coming with the backing after the fact, and then they have a bunch of sell pressure, and then they're moving Bitcoin, and I think it's going to take some weeks before we really figure out what happened, because it's hard to piece it all together. But to your point on Frax, it's right now Frax is 2.4 billion in market cap, so they're a fifth or a sixth of the side, but their peg in Frax is they're at $1.0005, so very well done when everything's crashing and there's an attack on probably what is that, the second or third largest stable coin. So that's really good sign. And so I want to say it again to sort of people who might be listening in the BankX community, is that the BankX protocol is really more designed with Frax, with the Terra Luna burn one token to mint the other as an additional price stabilization. So what's happening with Terra Luna, I don't think is really going to have any effect on with BankX when we launch with that type of attack that they suffered, because it's clear that Frax is still holding pretty well. So I think that's a good sign. And although it's kind of like everything, Stylianos, you've got protocols have their advantages and disadvantages, things they do well, things that they've proven that work. And for Terra Luna, I think it's always been, they're burning one token to mint the other as a price stabilization. But I think you need more than that, right? You need to have collateral. I think with BankX, we've got the moving collateral percentage, which is further price stabilization. As the demand for the stablecoin increases, the system lowers the amount of native blockchain token needed to mint. So it's another way that, where I think Terra Luna has sort of two pricing stabilization mechanisms, where you buy it when it's below the peg and you sell it when it's above the peg, and then you have the burn one token to mint the other. That's sort of their two primary price stabilization, where with the BankX system, you not only have that, but you have the two other ones where you have the moving collateral percentage, which we just described, and then this idea of when it's above the peg, you're going to mint because you're creating something for less than the market is buying. So there's an arbitrage opportunity. And then you would redeem when the price is below. So we have sort of four mechanisms that would incentivize the market to keep it at its peg. So I think even though there's all this turmoil, I think BankX is still in a very good spot, especially with all of your analysis of really more focused on Frax and sort of periphery on on Terra Luna.
Frax is more defensive, right? So essentially, it changes the collateral ratio once it can sustain it, which is a really smart mechanism. But also, I think what we see is that any algorithmic stablecoin, they need to implement various mechanisms to stabilize the price. And actually, I really like the fact that Terra built up a treasury. I'm just surprised that they've not used this effectively. But obviously, none of us, other than the people inside the Terra Foundation, we don't have a clear view of what's happening. I'm not sure how many Bitcoins they try to use, but also the Bitcoin price is going down, has gone down significantly over the last few weeks.
Yeah.
And this is really not helping, right? This is really not helping. But any stablecoin, any that wants to be really decentralized, they do need to, I mean, if they have collateral, it needs to be in crypto, right? It can be in US dollars, can be in euros, can be in pounds or whatever. Otherwise, it defeats the purpose.
Yeah. And what I don't understand with Terra Luna is like, what are they doing with the collateral? Like, are they putting it in? It doesn't look like it's truly backing the stablecoin because they're controlling. It's like the centralized control of the collateral with a decentralized algorithmic stablecoin.
Yeah,
that's kind of the way I would look at it. And then people get scared when a bunch of Bitcoin is moving around. Now, does this mean that when it's off its peg, they start buying it using the Bitcoin? I don't know what they're doing, so it's hard to comment on it, but clearly there's some issues there, and maybe they go into a redesign, something closer to where there is some automatic decentralized, where you're backing the stablecoin somehow. What's great is we already have this feature. I mean, we're already well positioned, I think, with the way we've set up BankX, where it's already it's inherent to the system with more of the combination of everything that we know that works between a partially collateralized and a partially algorithmic stablecoin. So at least I don't know how you feel about it, but I feel pretty good with what's happening, that what we're seeing with Frax and Terra Luna and some of the other stablecoins, just how the design of BankX, I think, is going to do pretty well.
Yeah, I mean, it's an improvement in many different ways, right? So it's clear that what this incident proves is that the design of US Terra is lacking in many regards, right? So I don't know what the next step will look for the project. I'm one of those people that believe that it's probably going to be saved, but even then, it will have a serious confidence issue. So it could be the case that it's saved, but then eventually it shrinks, which means that this leaves room for other contenders like BankX to actually take its place.
Oh, I think we could siphon a lot of people off of Terra USD, and I just don't get why they're not using this huge reserves to get it back to the peg. I mean, if that's their thing, we're at 40 cents. Why wouldn't they just continue to buy with their own reserves and get the price back to the peg, knowing that they're basically buying their own stable coin for 60% discount? I mean, if they really truly believed in their stable coin, why not use that 10 billion in Bitcoin?
I don't know. I mean, I've read some theories, maybe digging deeper. Yeah, saying that this is a coordinated attack and essentially the face the liquidity issue. There was a crash on BTC yesterday, so it could be the case that, I mean, there's this theory I've been reading that they were using BTC, but someone at the same time was dumping USD. So it could be the case that there was a very sophisticated attacker. I mean, look, the thing with pegs is I had this opinion today that all pegs eventually break, and someone was presenting the example of George Soros in the early 90s, I believe, who made shitloads of money by breaking the peg of the pound, of the British pound, to what was the euro precursor, right? So we've seen this happening in fiat currencies as well. Nevertheless, there are like many weird things going on. Like, even if it's an attack, I mean, actually, I think if this is a coordinated attack by a sophisticated attacker, this might actually be good news, because then you can analyze this as an attack vector and say, okay, there's this kind of attack, so this is how we have to defend against it. So, and also this has implications for BankX as well, right? Because we say, okay, so this is a new type of attack. This is what someone will have to do in order to deal with this type of situation, which is better than, if it was just a random loss of the peg just because the price of Bitcoin went down, or if it came out of the blue.
It's interesting because I think with BankX, where you have that decentralized, where the smart contract is in complete control of the collateral, it does give additional faith to the system. That's always been a problem I've had with fully algorithmic stablecoins, is you are just relying on the market. I mean, there's, which I think is not enough, as we're seeing. So to have things in reserve, or crypto in reserve, that's truly backing it, I think that's what we're learning here. I think the peg will be eventually brought back, but there is some loss of faith that now this is the second time that it's had a severe peg loss in Terra Luna. That's, I think, even with them potentially trying to back it, I still don't think, having the LFG or the Luna Foundation Guard have some backing. And another question is, where are these guys getting 10 billion to buy Bitcoin? So there's just a lot of questions, what I mean? Stylianos is like, of like what they're doing, what it was their strategy. It's going to be interesting, because I think we're going to learn a lot. But as far as a BankX thing, we're more based on Frax, as you know, and so I'm not too concerned about. This is more of just a great live time experiment in tokenomics and what can be attack vectors, as you said, and does it recover again? Because that'll be a sign of quite a bit of resilience if it can. But this is a big problem for them. I mean, they're going to be dealing with this for a time, because that is a severe drop, that's for sure.
Yeah, and I mean, again, this they'll have to restore confidence. One of the interesting things with Terra is that they were trying to build this ecosystem around them, so to add some more utility. But apparently, this wasn't enough to defend the peg. Something which is, it's crazy what's going on right now on Twitter and the news. People are saying so many things, but it's like, I guess that's also the nature of any volatile asset, right? It doesn't always go up. So far, we only had this speculation about whether we're in a bear market territory or not. Now we also have this. But I do believe this is the most important story of 2022 so far. For various reasons. It's on many different levels, right? So it's a very big project. It's a decentralized stablecoin that has managed to infiltrate in many areas of DeFi, which means it also risks systemic contagion. And no one really saw this coming. Again, maybe some people did, but I think most people were quite optimistic about its prospects. So what I hope we avoid is, the bear market. We might already be in a bear market, but like a serious crash of BTC to 20K, alongside with Terra going to zero. I think if this happens, then all bets are off.
Yeah, that's definitely, that's sort of the doomsday worst case scenario, right? Where you have a dollar stablecoin going to zero, and then a crash in Bitcoin. But it's interesting. We'll just have to see how it shakes out. But it's sort of a great lesson learned. But I still think we're okay with everything, because it's still our primary, sort of our central protocol that we were inspired by was Frax. So that one I think is has much more defense mechanisms.
You know what's interesting about BankX and really many projects in crypto is that in crypto you see many new ideas, and it's difficult to understand which ones are good or not, because they often depend on external factors, right? So if you think what you've been doing with BankX is a bit crazy, in the sense that there are so many stable coins out there already, and then you're like, look, I think I can make something better. And then if you ask, if you asked someone, I don't know, 6 months ago about whether we need one more stable coin, maybe the answer would be no. But what's happening right now with Terra whether they survive or not, the answer is a clear yes. So there has to be a better way.
We are still very far off from who's going to be the winner, and some people say that there can only be one stable coin, and I would disagree. I think there's room, just like there's room for different chains, there's room for different stable coins depending on what you want to do. And I think there's also, I think Stylianos is going to be another sort of flushing out of stable coins when people realize how inflated the US dollar is getting. So, so I think that's another part where we're in a good spot with BankX, and just in general too, Stylianos, everyone gets really caught up and even I said it earlier, like we have Frax at 1.0005. It's right there at the peg. And I don't know, I just feel like currencies move, they're not just supposed to be, so if you have something that's sort of lagging an asset and it's sort of moving around, in the case of 1 gram of silver, like if we follow 1 or 2 cents and it just sort of lags, I don't think that's a problem. I don't know where the market gets so into, we're 1/1000th of a penny to the dollar. Like, well, yeah, but you've got commodities that are 5 to 12% inflation each month. So you're getting really into pegging with something that is losing that value every month. So so that's sort of the way I look at it. And currencies are meant to move, even the dollars moving against other baskets of fiat all the time. It's sort of like the cleanest clothes and the dirty laundry. So yeah, I think as long as it can just track it, sort of this soft peg, but I think we're going to be much better than that.
And I think one of the interesting project is Olympus DAO, because they didn't want to be like a stable coin. They wanted to have some kind of floor on the value of the asset. And maybe that's the way to go. I think the way BankX is set up, similar to, Terra Luna followed a similar format. It didn't work out that well, but it's also with Frax the same thing. We have these 2 assets, and ideally one can be stable, the other one is going to keep appreciating. I think what's probably key, and this is what we should see with BankX, is that the token, have the stable coin, and then the token supporting the stable coin is going to appreciate, but smoothly. What's happening now with Luna, I don't really like it, that it's going up and down, it's extremely volatile. It's obviously like a side effect of this whole situation, right? But eventually, from the perspective of, let's say, economics and token economics and wealth preservation, I think it's quite a healthy thing to have an asset, a crypto asset, which is steadily appreciating in value. And I know, like crypto space is full of all these 100x stories and whatnot. This is fine. But I think from the perspective of sustainability and the whole space maturing, and actually this, like these assets being used for most of our daily transactions, you need to have some kind of reassurance and relative stability. So I think probably this is where the space is going to head towards. And I also believe that BankX is more or less designed to support this narrative.
I'm just looking at the Terra price, and it's been looking at some heavy downward pressure for the last week. So it's almost like people knew it was coming. So this is going to be, we'll be studying this for several weeks here on what happened. And but however, the way that this was attacked, I don't think is not an issue for BankX. So from what I can tell, I'm gonna stay in close touch with you on it if we see something. But Frax has done really well, so looking pretty good.
Absolutely. So good stuff. We're going to be monitoring the situation, and I guess we're going to speak again and have another discussion after everything settles down. Hopefully we'll settle down at around $1, not 0. Hopefully sooner than later.
They got to start buying it, getting it back to the bag. So well, sounds good, Stylianos. We'll loop back around in a little bit and do a follow-up after we see what happens here.
Sounds good, Lance. Speak soon. Have a good rest of the day.
Thanks very much. Okay, good. So we can